Welcome to Profile Traders. This is Reza, and today we're gonna be talking about triangles. Triangles are among pattern formations that you will oftentimes encounter if you trade candle charts or bar charts. They are a form of congestion after a directional move up or after a directional move down. And the reason why they form after such moves is because the market needs time to digest the directional part of the move and then decide if it wants to continue or if it wants to reverse. So let's look at a real example of how a triangle can be identified and how to trade it. For instance, in here on the way down, there is no doubt that we had very little pause anywhere, and it was just a very severe, convincing directional move to the downside, until where we reached a point here where price was low enough to generate a response to the upside, and after the response to the upside kind of cooled down because the rally was quite significant, going from $48 all the way to $58, it paused and it formed a sideways rotation here. Now, in order to see a triangle, what you need to do is to go look at the lows that we have and pick out the two lows that are sticking the most out and draw a trend line through it. And then you can go do the same thing on the other side. Hook these two contact points, and you can see that you had a very clear-cut triangle that was forming here. When a triangle angle of the resistance line is downsloping and the angle of the support line is upsloping, this is what you call a symmetrical triangle. And a symmetrical triangle means the balance between the seller and the buyer is even, and anyone has a 50-50 chance to win the battle within the triangle and exit one side or the other. In here, it exited to the downside. Why? Because after several days of undecided action, when we try to actually exit up here in this day out of this consolidation's top, we failed and closed down. And then from that point on, the next day you got a very severe selling that was initiated because most likely everybody that was long looking for a break to the upside of the triangle got very much so disappointed when this didn't happen, and on the contrary, a down push started to be initiated. After that, the triangle broke to the downside, and the way you confirm a break out of a triangle is that your daily close or whatever candle close of a time frame you use must close on a closing basis outside the triangle. So once this was done, this triangle was confirmed a failure to follow through to the upside after the initial push up, and for that reason the failure of the buyer to push price higher returned a big punishment by bringing price to very much so where he started again the last time buying. And when we did that, here we did a double bottom, and from that point on we got another excellent rally. This kind of a thing happens very often when you come and retest a significant low, just to make sure that that low is important enough, and if it is, then That's where serious money comes in. So now if I go ahead and delete this one and look at if there is another triangle here, I can definitely draw without any hesitation a resistance line that would already figure or frame half of what I need to draw a triangle. Then I can go look and I can see that there are two very nice bottoms sticking out here. I can draw these, but these two bottoms are a little bit extreme and they haven't been tested enough. So I'm gonna go ahead and figure out if there is a price that has been tested enough and did hold, and that is 57.60. So I would delete this, and then I would now have a triangle formation which has a flat bottom and a descending top. That means something is about to happen because we are reaching the end of this battle. Why you have a sloping downtrend is because every time price goes up, the seller pushes it down from a lower level. This push down from lower levels make a downtrending resistance line. And every time it comes down, the buyer is also sitting, accumulating at 57.70. And this battle between the two will happen until one side or the other will exit. For this to exit on the upside, we will have to have a good candle that sticks its head out of the upper resistance line and closes outside the trend line. And then we are no longer allowed to return back into this trend line. If we exit and return back into it, the consequences could be quite dramatic. So to make a long story short, for a triangle to be a continuation pattern, it has to be formed like it is right now after a good push to the upside. Failure to break to the upside could have very dramatic consequences when it does the contrary and breaks to the downside. If it breaks to the upside, we are looking for both price expansion on a break up and preferably volume expansion. And after one retest of a possible retest of this line, once that retest is down, we are no more allowed to enter the triangle, and your upside objective could be a measurement from where the boundary of your trend lines are to define the triangle minus whatever range is below it. Therefore, if I go measure this more or less from 47.6 to 57.6, that's about 10 points. If we truly want to exit here and put the same range that we have below on the upside, we should then have 10 points upside from 60, which should take us then to $70. That's how you analyze and trade triangles. You trade them on a break up or on a breakdown. Measurement or projected measurements are based on the legs following them, and protective stops is always when it exits from one side, the other side becomes protective stop. This was a mini course on triangles. Of course, there is a little bit more to this. The shapes can vary. You can have different shaped triangles, but they are always consolidation triangles, and usually they are continuation pattern. That means after they form prior to a push, usually they continue and exits in the direction of the first leg, depending if it's up or down. This was Reza with Profile Traders. Thank you for listening.